Wake up, motherfucker.
Yo, hello. It's the evening. It's January 24th. At least my time. East Coast, you guys are already on the 25th. But another quick late night show. All right, guys. Now, let's look. It's ending the week, and then we got to prepare for next week. All right. So let's look at how the Gamma Flip line is going. So on Friday, we were trying to get above this Gamma Flip line. So I'm using bar chart. You probably could use another service, but according to bar chart anyway, the Gamma Flip line is 692 for the SPY, the SPY ETF. Okay, the most widely used ETF to track the S&P 500. So when we are in positive gamma, this green area, things are good. We have low volatility, all right? So when prices are above the gamma flip point, dealers are considered net long gamma, often from calls, which means they will buy as prices fall and sell as prices rise, lowering volatility. This creates more support for the market on the downside and allows the market to move gradually upwards. So you want to see this. Okay, so then we have a stable market. So then that's why you have this steady move up, right? Since April, we've been moving steadily up until October. And then after October, you see this kind of like back and forth we've been doing all the way until now. Of course, there are a couple markets that have not been doing that. They've been continuing to go up even faster. What are those? We've already listed them when I started this show again this year. It was semiconductors, it was materials, like materials meaning mining companies like gold miners and silver miners in particular, but also you also seen uranium, platinum, nickel, palladium, copper, lithium. Okay, those have done quite well. Actually, this week we've seen a big improvement in platinum, palladium, and copper and some other miners. So we'll go over those today. So will they continue up? Is this where we should be positioning ourselves? So not only will we look at small caps like I was doing next week, I'll continue to look at more small cap growth stocks, potentially like I saw some big movements on DNA stocks. We got Moderna. I listed one of those. We'll look at some others probably. What else? What else we'll look at? I don't know. I think those are the ones I want to cover as we move along towards the end of this month. So we'll get ready for when the market turns down. We are positioned to move all our cash and continually inject into those type of stocks. Of course, maybe gold and silver will top out before then. I don't know. And it will drag everyone else. Now, if you look at it, we failed. We closed the market below this gamma flip line. What does that mean? If you're in the red zone, this means prices below the gamma flip point. Dealers are considered net short gamma, often from puts, which means that they will sell as prices fall and buy as prices rise. So selling begets more selling. That's what it means. And if we bounce, we beget more buying. So that's why every time you go below it, you see higher volatility, which is great for trading, terrible for investors or swing traders. Okay, this is not a great time for swing trading or investing because that means any other day it will just bounce up and down and you don't know what will happen, right? It's news driven, it's noise. So every time Trump says something, it will make things worse or make things a lot better. I don't know. And that's what you kind of saw this week. People freaked out over the weekend, and then Tuesday opened. They freaked out some more. And then what happened? Buy, all the way up until Thursday. Now, I said Friday might be interesting because we had Intel and the yen stuff from Bank of Japan. Something did happen with the dollar yen on Friday, but it didn't affect anything with the markets. Maybe silver went up because of that, but otherwise, nobody noticed a dang thing, right? It was quiet. Intel crashed 17%. Still quiet. Nobody reacted really because we were getting close to this gamma flip line and we're teasing it. Whoever was controlling the markets that day made sure we didn't have any volatility. But that might not be the case next week. So I'll read some articles about what's going to happen next time. Next week, lots of earnings, and more important ones, right? Let's look at what we have for semiconductors here. We got Texas Instruments Tuesday after the close, Seagate after the close. Those two kind of set the tone. They're not that important, like ASML, Meta, Microsoft, Tesla, LRCX, Big Tech, and other semiconductor stocks, but they'll set the tone on Tuesday because on Wednesday you'll have Powell talk. Okay, you'll get ASML, which will be big. It's a big deal. And then Powell will be talking in the middle of the day. And then after the market close, bam, 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 bam. 4 big ones right here. Microsoft, Meta, Tesla, Lam. Okay. And that's before we have Apple on Thursday. SanDisk on Thursday. Western Digital on Thursday. Those are the big memory plus Apple. Yeah, that'll cap off the week. We won't know what will happen, right? And people will keep digesting what Powell said. Whew. Whatever's going to happen is going to happen. It's going to be terrible. Eric, evening crack. Who tipped you off? Nothing. It's like they were pumping Intel up. It was like so obvious. Like, why are you pumping it up before earnings? What's the point? The only point is to trap people up there above the resistance level because the highest it could possibly go was around $50. It was well above $50. So either Intel reports great earnings, which is doubtful. It's still transitioning, it's still trying to fix itself as a company. You're not going to have a good quarter, all right? You're not going to have a great year. Doubtful. You're not going to beat TSMC. You're not going to beat AMD. You're not going to beat NVIDIA. You're trying to fix all the problems. It's great that you're above $20, but anybody that bought at $20 or holding at $20, anybody buying at $40, $50, you're dumb. You're really dumb. That's not the right price for Intel right now at this point. When all the other semiconductors are flying high, Intel hasn't gotten to AMD levels or NVIDIA levels. It's way overpriced for where it's supposed to be, right? So the early bird already got it. And, if you didn't get it at 20, whatever, it's really like the best price to get Intel will be below 20, in my opinion. I still think there may be, if the market is going to go down in 2027, you'll get another shot at Intel, but at a way better price than 20 or 18. That's how low it got in April, right? You can get it at 15, 13, hell, maybe even 8 or 9 if we have a big financial crisis. You can get real cheap Intel shares later. So from an investor point of view, you can pay to wait. You can wait. There's no reason to be buying it at above $30, in my opinion, right now, unless you really have to get shares for some reason. There's other places to park your money. So you have to understand stocks are a competition, right? Money has to flow somewhere, and there are way better stocks than Intel for the price that you get. Yeah, it makes no sense, man. Especially now with copper and all the aluminum. Those stocks are rocketing, man. Aluminum, man. Aluminum's great for war. If you believe war is coming, you buy up aluminum. That's where you're going. All right, we'll discuss that in time. Okay, let me put my background music on. Some background music. Okay. Let's do this emo stuff. Screenshot this for yourself. Okay, you can screenshot that. Gamma flip line, that stuff. There you go. Screenshot that. Okay. Moving on. Let me see how much time I want to spend today. Just in an hour. Hopefully I can get everything done. All right. So we'll go through these stocks one by one. So some of these will have earnings next week. Some of them already had earnings, and we'll cover. And some of them are just like the material stuff I was talking about: the platinum, palladium, uranium, all that stuff. But let me see if I can knock out these articles really quickly. New York Fed dollar yen rate checks, source says. Oh, okay. What does that mean? New York Federal Reserve conducted rate checks on the dollar yen pair. So this was Friday pair around midday Friday. A source familiar with the matter told Reuters. Analysts say the move may have triggered a sharp drop in the greenback and could signal that the U.S. and Japanese monetary authorities may be preparing to act after weeks of sustained dollar strength against the yen. The dollar slid from around 157.5 yen at midday to a 4-week low of 155.66 in the afternoon. It was last down 1.6% at 155.85 yen. Acting as fiscal agent for the U.S. Treasury, the New York Fed carried out the rate checks, the source said. The U.S. Treasury did not respond to Reuters' request for comment. A rate check in which officials asked dealers what price they would get if they entered the market is something monetary authorities can use to signal their readiness to do so. Traders have been wary of intervention by Japanese authorities as the yen has approached 160 per dollar. Whether actual intervention took place might be inferred from the data the Bank of Japan is set to release on Monday at 1800 Japanese Standard Time, or 900 Zulu. Analysts said U.S. monetary authorities stepping into what began as a Japanese affair is not typical, but it is not without precedent. Oh, shit. That's it, boys. The big bankers are coming in to stop the bleed, man. Here we go. Here we go. All right, let me see if I want to read any of these. So the links are in the description. I guess you can read them yourself, because I just want to quickly just get through everything here today. Yeah, I'm not going to read this. This probably repeats the same thing. This probably repeats the same thing as well. Okay, let's see. Let me see this quote here. Neither U.S. authorities or Japanese authorities seem happy about the value of the yen right now, said Harvard economics professor Jason Furman, who served as chairman of the Council of Economic Advisors under former President Barack Obama. Everyone is on hair trigger for something that will change it. Okay. Finance Minister Satsuki Katayama and the country's top currency official issued fresh warnings to speculators earlier this month after the yen weakened. Japan last intervened in the foreign exchange markets in support of the currency in 2024 when the yen pushed over 160 yen. That was preceded by rate checks. That was preceded by rate checks. Rate checks have often served as a warning to traders that authorities view the currency's moves as excessive and are ready to buy or sell in foreign exchange markets to influence the price of the yen. They usually happen when volatility increases and verbal intervention fails to rein in the moves. Okay, all right. Okay, you can read the rest of this yourself, I guess. Let me see. Market focus on the yen stems from volatility in Japan's bond market earlier this week, said Ed Al-Husseini, portfolio manager at Columbia Threadneedle Investment. It is possible that the U.S. Treasury is nervous about spillovers from the JGBs to the Treasury market and is studying currency intervention as a stabilization tool. Whether this risk is material is an open question, but rate checks and even rate actual intervention have historically not had persistent effects. There would need to be a real policy change for that. Okay. Given past concerns by the administration about currency intervention, the U.S. seems to be giving Japan the green light if it does need to intervene more forcefully. It is also important to note that rate checks in the past haven't necessarily meant that intervention was imminent, but the fact that the New York Fed was asking implies that any potential intervention in the dollar yen won't be unilateral. Okay. It's plausible that the U.S. would intervene in current circumstances with the shared goal of preventing excessive weakness in the yen while also hoping to indirectly contribute to stabilizing Japan's bond market. All right. Anything else here? Yeah, I think you can read this yourself. Okay, let's look at these scenarios. Blah, blah, blah. There are a few possibilities worth considering. The first is that the Ministry of Finance would like to stabilize the yen but not intervene directly. The Japanese currency has been sliding over the past few months, even as Japanese bond yields have risen. Government bond yields and currencies often move in the same direction. If Japanese officials decide not to act, Donnelly expects investors will soon see a large short squeeze in the currency pair. Then the Ministry of Finance and Bank of Japan will need to intervene directly at around 159 yen or 160 yen to the dollar. A second scenario, this is just a taste of more intervention to come, and the Japanese Ministry of Finance will drop the hammer and attempt to push the yen even higher on Sunday evening. So we'll see tomorrow. Third scenario is that Japanese officials will save their firepower until Monday. The Bank of Japan on Friday decided to leave its policy interest rates unchanged on Friday, but signal more rate hikes would likely follow. The last Japanese administration had a love for selling dollars for yen in New York time for some reason. Yet another possibility to consider, the move could also be a start of a more coordinated action between the U.S. and Asian allies like Japan and South Korea. Treasury Secretary Scott Bessent recently said he discussed the Korean won's weakness with senior South Korean officials. I am always a massive skeptic of stories like this because they pop up frequently and are never true. This time, however, there is obviously some real-world decisions being made, or the Fed wouldn't be taking action. So it's not ridiculous to believe that following Bessent's comments on the won last week, the U.S. and some Asian partners have agreed to stabilize or strengthen the yen, the won, and the Taiwan dollar. All right. Okay, anything else here? But some analysts are still left puzzled by the Treasury Department's move, as recent interventions to stabilize the yen have come from the Bank of Japan. The U.S. Treasury rarely intervenes in currency markets. It's highly unusual for the U.S. Treasury to intervene. Okay, we read that part. Blah, blah, blah. This guy. The fear that Japanese interest rate movements are going to spill over into treasuries is pretty unfounded. While such interventions by the U.S. government are rare, Mr. Bessent has taken a more interventionist approach to currency policy as Treasury Secretary. When Argentina's economy was teetering last year, Mr. Bessent orchestrated a central bank currency swap, used a bucket of money that the Treasury Department controls, known as the Exchange Stabilization Fund, to buy pesos. Ooh, that sounds familiar, doesn't it? So I read the dollar milkshake theory for you guys 2 streams ago. Okay, go back to that stream, go to the end. I read the whole PDF where I wrote down the summary of that podcast. That's it, man. You got the slush fund right here. They're printing out money, giving it to the other countries, okay, as swaps. All right, to stabilize their currencies. So shit is going on in the background here. Shit is going on. So pay attention to currency markets. That will affect our liquidity, and also may explain why silver keeps going up, huh? That's about it. So besides silver, what do we have? We got aluminum. So these are monthly charts here. So let's look at Alcoa monthly chart here. So we got the DeMarc counts going up to 6 for the monthly. So I'm guessing it's going to go 7, 8, 9. And by that time, it'll be $100 per share for Alcoa. Right now at 62, it already released earnings last week. Okay. So pay attention to aluminum, see how far it gets. It already broke out in December, continuing on into January. So this January, we are up 17% on Alcoa. So does this mean now that we are above this 55 level, 55.74 level, is this a time to add more? Or if you haven't had aluminum in your portfolio, is it time to buy aluminum? Yeah, probably. So gonna have to pay attention next week and going into February, how this one plays out. Now, what other ones do we have? We have FCX. So this is the largest copper mining stock here. It started moving up in counts last month, December, but so we got initial 1 count on November, 1, 2, 3. So this is an early stage mover. This one, if it breaks the last high seen in 2008, so this is around $63, and we're already back to 60. Once we break out, we are going to see new levels we have not seen before for this stock. So this might go to space after we start touching 65 plus to 70. So this one also, something to watch. Okay. Now, what else? We got gold mining, ETF, GDX. So let's see how this one's going. So I said this one had a C5 or whatever look to it. Yeah, it's on a 5 count. So yeah, we're towards the end of this run here. We already completed a 9. This could keep going. You know, it could, but I'd be getting pretty skeptical. So right now it's up 24.78% this month for gold mining ETF. Let's look at silver mining ETF SIL. Should have a similar look here. Yeah. So it's 2 bars past the 9 count. We've already broken through the target of 68. So this is a D-Wave projection made in 2016. So it projected at least a move to $78. Now it's at 111 for silver miners. Will this continue? Yeah, we'll see. We'll see. This might just take a break. You know, after this move, it's going to go wiggle up and down here. And that could be very violent, right? We could have a flush on silver, and then people will just buy back again, and then it will continue moving next year in 2027. This year could be a flat year for gold and silver, honestly. I think maybe it's gone way too much for silver, at least. I'm not sure about gold. Gold will probably touch 5,000 and then take a break. So that's what I'm thinking. And then we're going to have to watch other things too, like the memory. I think it's going to be tied to the memory stuff. And the yen, I'm not 100% sure. Like, is all this intervention positive or negative for gold and silver? It's not clear. Not clear. Some people will probably be saying like, oh yeah, the dollar's crashing right now, so of course they're probably moving to silver. Or that's just not true at all. And the fact is that because they're intervening like this and trying to keep the yen at some point, eventually it'll break. And when the yen starts like rising back up and the dollar rises again, then yeah, it'll just unwind. Like, so dude, I have no clue. I think a lot of this stuff is new to people. I don't think we ever been in a situation like this. Like, Japan's definitely entering into an inflationary mode. It hasn't been in inflation for over a decade now. And we never had it where we had silver and gold at such a high level either, right? So who knows, dude? And then we're probably going to lower interest rate at the same time. So yeah, that things will probably get messed up in May. I don't know. I'm not gonna say, oh yeah, wow, I believe this story is gonna do this, react this way or that way. I think the financial markets are too complex now that anybody really understands what will happen when something breaks, because that's not a guarantee that silver is gonna keep. If something breaks in a way that people run back to the dollar, of course, all these things will just collapse, right? So that's something to consider. Now let's look at TMC. TMC, underwater mining. So we had some news that Trump is trying to speed through licensing and permits for underwater mining. So it got a little boost today, like last week. So 53% so far on TMC for the month. Okay, so we are retrying for the $10. So does that mean I want to add more? So we did a good job from 2024 all the way to 2025, right? We went from like less than $1 to about $8, and then we hit like above 10 around October before crashing back down to 6, and then going back down to 5, and now we're back up to 10. Very volatile. This is very volatile stock. I wouldn't be like throwing a lot of money into it unless you just believe in this lottery ticket, okay? Because to me, this is just a lottery ticket. I just put like what 10,000 into it, right? And be like, whatever. If it goes up to $20 from $1, so be it. But I'm not gonna risk any more money in there. That 10,000 to me isn't much, right? So for you, I don't know what your finances are, right? How much you want to like for you, 10,000 might be like 50% of your whole portfolio, and you might be like, hell yeah, I believe this thing's gonna go to $50. Why not? It could, but it might just crash back down to like $3 in like a couple years, right? So I don't know. But all right, I'm waiting for this thing to start counting again. We already completed 1-9 here, 1-9 count here. Eventually, you'll start seeing a 1 pop up again sometime this year. If you see that, then I'll be like, oh, okay. I'll start adding more and more and more, because then we'll have 1, 2, 3, 4, 5, 6, 7, 8, 9 months moving up. And this thing is so volatile that 9 months of it moving up could mean it's going to like $30, $40, $50. All right, from where it's at now, like 9, 8. Like let's say it moves between 6 and 7 and 8. How about that range? So that's something you can consider. Now a similar stock is this platinum one. So I accidentally talked about platinum one day, and then it reminded me, oh yeah, I do have this stock that I like to talk about from time to time, PLG. Very disappointing to me, because this thing should have broke $4 months ago, in my opinion. But all right, better late than never. It's $3.50. It might break $4 next week. Okay, who knows? Or next month. If it does, this is very significant, because you can see this blue line here. This thing is about to get to this cloud area. Once it breaks here, we can go from $4 to $9.62. That's the next target set here. And who knows, we may be able to get up to $200. Maybe platinum is the play to make. So for all you silver guys, time to move on. It's platinum that's going to make it. Palladium. Okay, so maybe that's where you got to go. All right, let's see what questions you guys got. Has silver ever been rising? Why has silver been... it hasn't really been rising the last couple of years. It's just been going sideways for the most part. It was gold that was dominating everything. Gold is the leader. When silver starts acting really good, it's like you can see it. So look at 2011, right? That was the last time it was this high. And let's see, the last time it got high was 2021. And it's been going sideways at 26. So it goes between 22, 26, 30, 22, 25, 27. Yeah, it pretty much stayed below 35 for like years. It's only been up since like August. It crossed like 40 in August and July, and then finally really got traction in September when it really flew up. But aside from that, yeah, it was below 35. So was mostly the gold. That's where I was focused in. Gold is the leader. Okay, gold's been moving since 2023. See, 2000 to 3000. Only since 2025 did silver start like outperforming gold. That's it. Yeah, I mean it's tripled, but so what? That's only the last couple months. It wasn't the last couple years. You could see this is how it always is. Gold is the leader, okay? Because gold is where you park your money. This is where people park their money because gold has no use other than people don't like to own fiat. Silver has uses. Silver is an industrial metal, okay? That's pretty much it. I mean, yeah, it's a precious metal, and yeah, some people treat it like money, but most people who have money who want something that's not a dollar, not a yen, not a bond, not a stock, not a house, where do they go? They go to gold. Nobody talks about silver. Silver has industrial uses. That's why I said you watch silver, look at how similar it is to a memory stock like Micron. Look at when did Micron start rocketing up? Around the same time. Okay, so Micron broke out of its last high. So the last high was in June of 2024. September is the same time silver went up. So, and if you look at copper, it's the same thing. Copper goes up the same way. So copper, silver, if you look at memory, they all move up because memory is a commodity. Okay, memory is the most commodified semiconductor. It's in everything. You need memory for anything. That's why Intel stopped being in the memory business during the 80s. During the 80s, they threw away all the memory departments and sold them off to the Japanese because they're like, dude, memory is a commodity. We don't want commodity chips. We want to sell CPUs. CPUs, you can charge an arm and a leg and people will buy it. Memory is just something that people will just buy regardless, and they should be cheap. Memory should be cheap. Of course, that's not the case today because AI has overpriced everything. GPUs, CPUs, water, air, energy, everything goes into AI now. AI is basically more important than human beings, okay? So AI has to pay rent. When you go to the Google Cloud and you want more gigabytes, you got to pay a subscription. You're paying rent to store your Word document, right? You are paying a subscription to use their AI services to get them to do deep fakes of your celebrities. It's like, oh, I want porn of Jessica Alba. And it's like, all right, well, we charge you now. We're going to charge you. You want porn of a celebrity? Well, you're going to have to charge per query, charge per prompt, charge per megabyte. I don't know how whatever, right? So that's what's happening. So everything now has become overpriced and bloated. And so it makes sense. It makes sense. So if you treat this like a gas and oil, that's what it's acting like. It's acting like demand is scaling up higher than actual supply. Actually, I heard on Davos, some of the speakers were saying that they had to charge. They were like, what did they say? Somebody said something interesting, and I forgot. Yeah, I forgot. There was a lot of interesting talks last week in Davos. So maybe I'll have to go to all the Twitter feeds and look around. But anyway, so we covered that. Let's look at the sprouts. Physical platinum, palladium. You see this? We hit a 9 back in November. So this is good. All right, we're breaking out. We're getting a new high, higher than 2021. So we got to watch palladium, platinum. Let's look at uranium. Let's see if it's broken out. No, we still haven't hit the last high back in 2024, but we completed a 9, so it's probably going to take a break. Let's see if we can crack this 23 level. Okay, so we're going to go over this again some other time. Let's look at the miners for uranium. Has it reached a new high? Okay, yeah, it has. So we got an 8 count here. It might be a 13 next month. Okay, all right. Let's watch this. Let's see if this continues a trend. If it doesn't continue this trend, then we're still going sideways. We've been going sideways on uranium since 2021, right? It's been really annoying. Every time it goes back down to 30, goes back up to 70, goes back down to 30. Let's see if this time's the charm. So gotta pay attention. Now let's look at the very first semiconductor earnings for next week. The big one, the big important one. Not the very first one is Texas Instruments. I don't care about that though. This one is going for an 8 count here. So we're gonna hit a 9 next month for ASML. This will be very important. If you look at ASML long term, this has been a very good stock since the 2008 crash right here. This was the low in November 1st, right here, $12. Now it's 1,389. This Netherlands stock, very important because they make extreme ultraviolet machines to build and fabricate semiconductors. These machines are banned from China. Okay, they're not allowed to have this in China. That's why China is 10 years behind Taiwan and Intel in terms of fabrication, and Samsung, because we block these machines from them. So they have to play catch up. So China has to figure out how to copy this technology or make something else to compete and get to the same levels as the West. But this is going to stop them from catching up, right? And this is why this company is very important. Now, not being able to sell their best machines to China hurts their, bottom line. So I'm going to be curious to see if this is the end for this stock for now, and this will have to go down. That's why, like I said, Intel and all the other stocks. Yeah, Intel, dude, it went over its skis. It's way too early to get to above 50. It's got to go back down again, I think. So if you look at semiconductors, it's already way overpriced. Everything is overpriced for semiconductors. The whole index now already went up like 15% for this month. That's already a lot of gains in 1 month for the first year. And this is on the back end of already going from the low of April up here. It's, dude, that's 30, 40, 50, 60%, right? This is insane. So yeah, I shorted Intel. I started shorting the whole semiconductor index. I'm using SOXS. So if you want to follow me, I bought that below $2, hoping it can go up to like $8 or something. I don't know what I said. I said 80%. No, it's not $8. That's crazy. That's like a 4x. No, I said at best 80%. So maybe it'll go up to like what, 3 something, 360. I don't know if it can go up to 4. I mean, that'll be crazy. That means like the whole semiconductor gets repriced again, but you never know. So SOXS is 3x ETF to short. So I'll talk more about that next week. I'll add to it. So I'm waiting for ASML. If ASML disappoints and this thing crashes, if Texas Instruments really makes it go down, then sure, yeah, I'll keep adding to it ahead of Apple and Microsoft and Meta and Tesla, all those big tech companies, Jerome Powell and all that. But yeah, I felt like it's worth a shot. Let's just try to short it. All right, I'll cover some these stocks later, early next week, because they'll have earnings, and then we'll move on from there. All right, let's play a couple videos and then we'll end it. So it's about they'll wrap up the whole thing, because I have Samantha LeDuc will talk about gold. So what else I gotta cover? Anything else? Nope. Okay, let's do this. Let's see. So Bitcoin now at 88. Yeah, it's I already got a hut like on Wednesday and CLSK. They look like it tried to make it back up here with Bitcoin on Friday, but I don't know, still looks weak to me. I'm not jumping back in. CLSK did a lot better. Thursday was really good because while the other Bitcoin mining AI, Bitcoin type companies started going down again. And then on Friday, it really tried once again to get to 14. It looks like it wants to hold. This chart looks a lot better than the others. I mean, HUT in the long-term weekly chart looks good, but I'm not trusting that Bitcoin is going to survive next week if the market goes down. If the market goes up, fine. But if the market goes down, Bitcoin is going to go a lot lower, because every time the QQQ, the NASDAQ starts throwing up, this thing just like goes even down even more, and it doesn't even recover like the QQQ does. So if you look at the NASDAQ, you see, yeah, you had the taco trade, Greenland, blah, 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 puke, right? Goes down 2%, goes below this box. And then the rest of the thing, okay, Trump walks everything back. It goes back on Thursday about a high of 622 above this yellow area. This yellow area is where all the battles are. And then on Friday, it stayed above it. Okay, that's good. But if it's going to break out, you need the earnings. We don't know what the earnings are. And then now you got this Bank of Japan nonsense. I have no idea what's going on here, because look at that. Like on Friday, when the market opened, something happened and this thing crashed. It's like, oh my God, what is this? What is this? This is a huge candle for a currency. When you go down like over 1% in a day for a currency pair, that's a big deal. That's a big deal. So yeah, something definitely happened. Somebody was goofing off here and trying to make sure that the dollar didn't get too strong, because that messed up the whole dollar itself. If you look at the dollar, you see this. So if the dollar index drops below 95 or something like that, that's really going to mess things up. Now, I assume the Europeans aren't stupid and they already hedged. So if you look at the dollar euro, it's already been very low. It's been very low since July of last year, and it's been dropping since February. So I doubt a weak dollar is going to scare Europeans to sell their US stocks, because I assume that they are shorting the dollar using something else to protect their positions in US companies, because the US stock market is always the place to be. And I don't think Europeans stick to just European stocks. They love to buy Google, Apple, and all the other tech stocks. But like I said, if those big tech companies eat shit next week, then guess what? The Europeans don't even want US stocks. They'll be like, hell no, we're not keeping these anymore. They're going down. I might as well buy some European companies, because you can't handle the pain that will happen. And that's when the problem starts appearing. Okay, so let me show you this. This is the Magnificent 7 stocks. So right now we've been flat since December, 3,200. And you already saw Tesla reports, Meta reports, Microsoft reports, Apple reports. We got 4 of the big ones coming out next week. Anything else? Yeah, those 4 big ones. That's enough. That's 4 of the 7. And then after that, we'll have some more. 2 weeks. In 2 weeks. Okay, so yeah. All right. Okay, let me play these videos and then we'll end it. Okay, so let's see what Samantha Leduc says about gold. What does she think? What does she think about gold? Is it going to crash anytime soon or not? Silver, is it going to crash? Let's hear her expert opinion.
This short clip is from my live trading room. You can engage directly with my fabulous team and me at leduketrading.com for all our research and trades, or for just my daily live stream, you can access via YouTube memberships. All links are in the...
So if you have a lot of money, I definitely recommend you just go to her, because she's way more expert than me on this stuff. So, I mean, I think it's worth it. But you got to pay money for her services. But I mean, if you got millions of dollars, like, do not be listening to me on how to manage your money. All right, it's like, go to someone else, please.
Description. I wanted to get to this. Japan caused a bar shock. I think this is important. This is a picture of silver. What happened right here in the October low, new PM for Japan. And it wasn't that it was a female. No. It's the fact that major fiscal spending was immediately felt. So the yields in Japan have been spiking higher. We all know this. And gold and silver have been obviously spiking higher. Yesterday was a big VAR shock. So funds were really in a bad situation, because usually you have a dollar goes up and risk off, or bonds. Nope, they both went down. Equities went down with Bitcoin, which Bitcoin I believe is more like a currency. Gold shot up and VIX really shot up, but metals did not get hit. So I went into this going, wait a minute, I've been talking about how metals will get hit on a VIX spike, and they didn't. So looking into severe dislocation in the bond market, but global impact and the spillover risk, this is what you want to look at. This entire carry trade unwind without much movement in the yen itself is underway. And that's where I was like, wait a minute, yen didn't move, VIX spiked, metals didn't come down, something's up. And I really do believe Japan is in control of gold. As I've mentioned, the US dollar yen is to gold as the US dollar yuan is to silver. Inversely, I've shown those charts a lot. Those are the major areas I think to look at. And as such, yes, this is going to be a February 8th kind of mandate. So look for potential risk off into that area. Maybe it's a buy the rumor, sell the news. I'm looking for events that could basically interrupt. Long story short, including some of my price targets that have gotten hit. Anyway, I go on for those who are just interested in the market stuff and not the macro, which I think is causing the market stuff, that we have a fund spiral in Japan in full view without admitting it, while yield curve control right now they're trying on the front end, like the 2-year, while they simultaneously talk about rate hikes to the press. So massive distraction campaign. And I think it's a trap, and I think the Japanese know it, which is why gold is better than hoarding their useless cash or their junk sovereign bonds. Because remember, Bank of Japan owns 50% of the market, bank pension funds own the other 40%, and then it's 10% of foreigners. So they know this. So anyway, I think that's why the gold market has been responding extremely strongly to the new PM, the fiscal spending, and the lack of yen movement. I had to figure this out. I had to figure out why in the heck yen isn't moving, metals aren't coming down with VIX. There's something I'm not seeing. I think this is related strongly. Anyway, moving on. Oh yeah, that's the chart of the 10-year JGB to gold, and they're really in lockstep. And a warning on gold and silver. The Bank of Japan and the MOF, when they intervene on Japanese yields, it will put a pause in the gold advance, I firmly believe. Maybe the February 8th public vote doesn't go her way. Maybe fiscal spending gets a cap of some sort. Anyway, I'm looking for reasons in Japan that would actually cause a short-term volatility in the metals. I also gave you my levels for XAG. Look at this on a monthly. It's completely parabolic. This is silver US dollar. It's not quite to a fib level, and I'm talking the fib level from the 2011 high. And the same thing with XAU, fib level from the 2011 high, we've made it way up to my 4780. Now I did give 6,000. This is true, but that's after we digest here. So the mean is about 3,900, and we're now approaching 4,900. That's a big potential volatility event. This was a little one. Look how tight this has been to the 10-month moving average. Tight, shallow for months. And then it breaks out. At least a few months we had a digestion period, and then it breaks out. So it will go into a consolidation period at some point, and that's all I'm trying to say about that. And then I also warned the dollar yuan is sitting on the 400 week. It doesn't show in this particular charting software, but this is to show you the inverse relationship of that April intervention on dollar yuan and silver. But I think with a 400 week tag, it should matter. So it's getting into that point where miners are reporting, and Japan is definitely in control, I think, on this gold side, and they've got some reasons why it's been bid, but I think it's local reasons, interestingly enough. My geometric mean chart of silver gold ratio is at another inflection point. This was the October shake and bake. This was the December shake and bake, and here we are, massively, almost right into that 4.23 fib level extension from the 2020 low to high pullback extravaganza. And this is where I warned, once we get up here, I think we could have a little shake and bake. It would match. It would kind of all come together with my XAG USD at 98 and my XAU USD gold silver at 4,800, let's call it 4,780. Were they?
Alrighty, okay. I don't know where you can buy that. I mean, if you want to buy something worthless, buy some Turkish lira. You can buy that pretty easily. You can just look at Turkish ETF, look at Turkish companies. So by proxy, you can buy those. That's pretty much why Argentina stocks last year went up, because like the dollar is so strong to the Argentina peso that it's not because the companies are doing good. It's just because the dollar, like the dollar is so strong, and then when the peso improves, then it looks better, right? On paper, but that's just a currency like reason why the thing. So yeah, you can look at Argentina ETF, it does the same thing, Turkish ETFs. But yeah, Iran, no. Iran, there's nothing. You can't do shit with Iran. Okay. All right. So let's see here. Yeah, Manhattan Project. Yeah, okay. I'm sure the Chinese are trying. They're trying real hard to do that. Yeah, Prawn. Yeah, Prawn was there. I was on Deadman's show. I mean, I was watching Deadman's show. He was stream sniping. Yeah, Letty is there with Prawn, so Prawn can go try to find Letty again. You know, try to hook up with her. Like, if you guys don't remember Letty, like he tried to hit on her, make passes at her multiple times last year. They're all in the hot tub. Oh yeah, I'm sure. Man, I'm not a gooner, man. Like, I bet King is probably like whacking it right now. It's like, fuck that shit. Fuck that shit. Fuck that shit. Here, I'll play a clip.
Cute, adorable. Can you just like get out of here, please?
Are you threatening to call cops on me?
I don't want to. I have a crush on you. I think you're very cute and adorable.
Then why would you call the cops on a girl
Because
you have a crush on?
you shouldn't be here right now based on
But
the
you
social
invited me,
situations.
and I came all the way
I didn't realize the ramifications of the
I
situation.
literally came all the way here because you invited
Okay,
me, and now
here.
you're
No,
telling me
you
to
didn't
be
come
here.
here. You didn't come here because of me. You came here. You did not come here because of me.
Show me your bank account.
What?
You did not come here because of me.
Well, you're
I
the
know.
only one that sent me the address.
Yeah, but you're here to press.
No, I'm not. I actually was not going to press anyone. I was just going to dance and drink.
You're not. Okay, you're not here for me. I get what's happening. Like, you want to like be here for content. It's great. It's fun. It's
No,
fun.
I'm here to have fun, not for content or
Then why are you
press.
avoiding doing shots to me in the other room? If you're here for me.
Because you're trying to lure me outside of the door.
Oh, Prawn is trying some stunts. All right. Let's play the second part of Samantha's analysis here of gold, and then we'll end this. All right, and you guys can go to Kick and watch the gooning shit.
This short clip is from my live trading room. You can engage directly with my fabulous team and me at leduketrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. There's a saying, SPX, and it's inverse for gold and silver, that tops are a process with the markets, bottoms are an event, because it's always policy intervention to backstop the falling equities and bonds. But it's the exact opposite case with gold and silver.
Actually, in commodities markets, it's the same thing. It's like corn, coffee, anything. Commodities shoot up like bubbles and they crash violently. Okay, so they have these peaks at the tops. When you look at stock markets, it's usually the top takes a while to form, you know? It doesn't go off a cliff right away with stocks. So this is why boomers, they love trading commodities futures, because you can make so much money. This was like crypto to the boomers back in like the 80s, 70s, you know. Stocks were boring. F stocks. You want to make real money? You trade silver, gold, coffee, lean hogs. That's why, like, Trading Places, right? Trading Places, they were trading orange juice concentrate futures. They weren't talking about buying stocks of like IBM. Nah, that's not where you make the big money. The big money was in these types of commodity trades, and they are very volatile, very violent, just like shit coins for Zoomers today. So this was the place to make a lot of money. It still is the big place, but you know, you gotta be very sophisticated and know how to go around the manipulation, because it's a very manipulated market. In the 70s, there were these two brothers. They cornered the silver market, you know, so they pumped silver up really high. So somebody could be doing the same shit right now with silver. They could be pumping all that. Same thing with the memory stuff too. Somebody's probably manipulating stuff right now.
Bottoms are a process and tops are an event. So in a nutshell, I'm looking for that event. And I'm not going to go through and talk right now about this chart of silver. And I know all the reasons why it can continue to move higher. But I think it's right now a little bubblicious. And I've got some reasons for concern. And I've started to flesh those out. Actually, I've more than started. I've fleshed out a lot of them, but not all of the reasons why I'm much more concerned about silver right now than gold. Gold, first and foremost, is monetized. It is being used by China and other countries to settle trade outside of the dollar, outside of U.S. treasuries, U.S. dollar, and the U.S. petrodollar oil. So I think right now we've got a situation where there's some freak out going on in silver from when Jeffrey was first recommending this, remember, in April, and he held, it was a big position. And I know Brian, Jose, and Tim, and many others have followed suit. So this is why I've been on this. I've been continuously bullish. I predicted the volatility in October, and I think we're going to have some volatility again coming up really soon. And it's not just because it's a particular match with my intermarket stuff that I've talked about before, which is this geometric mean that has reached very strongly into the stratosphere here, and XAGUSD is also approaching my 98, which is silver. And this chart was posted in June, so all these levels have hit, and then it's gone parabolic. In gold, XAU-USD, we've also hit that 4780, let's call it 4800, and we're chopping about right there. I've mentioned repeatedly how USD CNH, or the yuan CNY, is very tightly correlated with silver. And I will also warn that we've got USD, the bounce that I have been thinking about is happening right here, this 400-week EMA, and we definitely had a little push here with the dollar yuan. And then of course this is a little bit different and a little bit more complicated, so I want to talk about US dollar yen to gold, because I think it's much more coordinated with what's going on with Japan. And this is where I think I need to flesh this out a little bit more. But I think the dollar yen keeps rising, and this has really come into play with gold and silver taking off in this neck of the woods. September, October, remember the new PM came in for Japan, and right now there's going to be a general election in February 8th. That's the date that I would be very cautious for bulls. I could be completely wrong, but my job is to be risk aware. I lawyer the trade constantly, both the bullish and the bearish, and even suggesting that silver could have a pull pullback is getting a lot of my comment without any, I haven't even read my post. Anyway, the point is, I think this whole escalation and FOMO crowd picked up in earnest right around the time that the new Japanese PM came in. Very hawkish comments towards China, specifically November 7th, fiscal spending, all that jazz. It's growing in importance what Japan does as it relates to gold. But I also think it has some other reasons why this has moved so sharply higher. And there's a lot of carry trade unwind questions going on in this spiking higher Japanese yield. We've got some massive moves. This is the Japanese government bond yield, and we have come back down because they're trying to talk it down, but it's going to be really tough. And by the way, I put this side by side with gold because of that reason. They're so correlated, in my humble opinion, in the same reason that the dollar yuan is correlated with silver. So my point about bringing that up is this comment that I made in a post that I sent out 2 days ago. This new Japanese PM has entered the scene, and folks are very, very worried about a yen carry trade unwind. And let me just explain that the old way of using yen to buy dollars, to buy NASDAQ plays, in particular the Mag 7 tech, this unwinds and creates that pullback in the market, or because they basically sell out of their holdings in US back into dollar and then back into yen, and the yen rises. And so it's a very, very expected, let's just say, path of repatriating yen back. We know this is what we're looking for constantly, and why I didn't see it last year. I kept saying, I don't see a risk of a yen carry trade unwind. Well, who's to say we haven't had it happen right here, right now? And it's funny, I'm going to grab this chart from Luke's channel, and of course, right here. This is Mag 7. So you've got this nice flattening that's been going on since September. I've been warning about this. This has been going flat, and then most recently, we had 13 days of outperformance in this new year with value over growth, small caps over large. Now, this is not to say that I'm convinced that we're going to roll over. We are right now in a position where we could have a very reflexive bounce in growth. I warned about this. It's coming. I'm looking for it. Or we could completely, of course, fall apart. Not my baseline bet. Just like the market fell into that 68.07 and then bounced right back up. I think that the new way the market is actually dealing with this yen carry trade is they are monetizing into gold. They're selling the NASDAQ, wonder kids, and they're actually converting right into gold. So it's no longer NASDAQ to dollar to yen. They're just going NASDAQ to dollar to gold, or directly from yen to gold. I believe that this has a little thesis here that I'm trying to work out and write up. But the point is, the whole system of hoarding is real. We got that. But the speculation, I believe in silver right now, also hitting my top fib level in 4.236 for this geometric mean, expanded exponentially from its mean right here to right here, is troublesome, especially when the main argument is about supply deficit. And I'm going to show you in a write-up that I'm doing with Jeffrey's help why the supply deficit is not real for silver. So look for that later. Long story short, I've got most of that written up. I'll finish it up and send it out, and you can make your own decisions. I am not saying that this is going to be the fait accompli, but I do say I think right now it is a darn good time to protect.
Okay, that was a lot of interesting talk. So, I'm really gonna have to be watching silver and gold when the earnings pop out. See if they move the same way with the earnings too. If that's true, if they're all correlated in the markets. Okay. Speaking of China, you hear she sacked as top general. This leaves tea leaves he's serious about Taiwan. I have no idea about that, but I will say that we are in a cycle for war in 2035. So we should be having a major global conflict in 2035 about something. So if it ever happens, it'll be there. Ideally, I don't think China wants to take Taiwan by force, because that's going to be ugly. You want to take that whole island peacefully through political means. So if China can't bribe people in Taiwan to vote for the certain parties that will increase ties to China, because you have to understand, in 2010 was when Taiwan started cooling ties with, warming up their ties, I guess is the right way to say it, with China. They actually had a direct flight from Taipei to Beijing. I was one of the people that were on those early flights, so that was very convenient for traveling back then. Before, you had to fly to Hong Kong first and transfer to a Chinese airline to take you to the mainland from Taiwan. But a lot of the boomers in Taiwan have investments, and they also own companies that have manufacturing in China. So a lot of ties between Taiwan and China have been made over the intervening decades. So the boomers do not like it when the rhetoric is about independence. The younger crowd, the Zoomers in Taiwan, they hate China. They believe in democracy, all that stuff. So in Taiwan, the quote-unquote woke politics of Taiwan is just basically against China. That's how the youth look at it, because they want to have, freedom and democracy, and they do not like the communist regime in China because of, especially of what they did in Hong Kong. After the transfer of power from the British over to the Chinese, they were supposedly supposed to keep the democracy tact in Hong Kong for how many years after the transfer, but they didn't really fucking do that. So looking at that example, I think the Taiwanese are very wary of increasing ties to China now, but the boomers want to keep their wealth. And so so there is a generational battle in Taiwan, which is different from the generational battles that you see here in the US or in Europe, whatever. People here are just worried about, like, why are the boomers not leaving the workforce or some shit. Actually, I saw some interesting data. First-time hires are 43% the age is actually 43 years old. Can you believe that? So for the for somebody who has a first-time hire, the average age is 43. Is that real? How is that possible? So people aren't hiring anybody that's young, huh? They're all hiring millennials, like older millennials, my age. So Jeremy has a chance. 35 is actually pretty young. You can actually start a career at 43 nowadays. I don't know. I don't know what that says about our education system or anything like that, or really, and especially with AI coming to the forefront here, and then all the CEOs in Davos were saying, like, oh yeah, AI will take over coding. We don't want coders anymore. They're fucking useless. It's like coding should be easy, trivial work. So we want actual engineers, actual people who are imaginative, who can actually solve problems we don't even think of. We want to find problems that we never thought of and solve those problems. Coding, bitch work. Oh, that's leave that for the AI. So, yeah, we're entering a new world, man. Learn to code, right? Well, that's over with. You're already replaced by AI, brother. AI's replaced you. I got Grok, man. I don't even need fucking like influencers anymore. Grok can give me all the AI influencers I need. I probably can make 30 grand a month just making fake profiles with AI. For people to coom. You don't need no real girls, man. Fuck that shit. Waste your time making real girls and e-girls. Make some AI e-girls and it'll all be the same anyway. 30 grand a month, dude. Making fake Instagram profiles. Amazing. And I could sell people the same products. Look smacks all you want. I don't give a fuck. I'll make my money that way. So yeah, we're living in a brand new world. There's a brave new world out there. So I'll see you around. Okay, guys, it's an hour, 10 minutes. We'll be back next week on early Monday. We'll see what happens. We'll try to find some more stocks to look at. I don't know what's going to happen because you have to understand the Bank of Japan is going to do something on Sunday or Monday. And at any time, the dollar yen will blow up the market maybe before we even hit real earnings, And Jerome Powell will speak 11 o'clock my time. No, 11:30 my time. So that's what, 2:30 Eastern? Yeah, I think so. All right. See ya.